Wednesday, May 22nd, that's when Nvidia will release their latest quarterly earnings. And of course, Nvidia being Nvidia, AI, data center, huge investments in that new cycle. If the results are not as good as expected, probably the whole market tanks. We've seen that in the past. Good results, market goes up. Bad results, market goes down. Even though we've already seen Amazon, Google, Microsoft, all the other semiconductor chips, they've released already their results. Some were very good, some were okay. So overall, we already know what the sentiment is, but we know that the market can be irrational sometimes. So in this video, let's go over everything you need to know with regards to Nvidia, the expectations, the previous numbers, some acquisitions that Nvidia has been making the last couple of weeks as well. Also, Wednesday after the market closes, we're going to have Snowflake's earnings report as well. Also, high expectations, maybe a bit lower since there is a new CEO. Guidance was, in my opinion, sandbagged. Remains to be seen what happens there. I'll do a separate Snowflake video, but of course, do leave all of your expectations and assumptions down in the comment section below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, really appreciate that. If you want to support me even further, do check out the links down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So first things first, little recap from Q4. Revenue increased 22% quarter over quarter and 265% year over year to reach just over $22.1 billion. Gross margin 76%, that's 2 percentage points increase quarter over quarter and 12.7 percentage points year over year. Operating income reached $13.61 billion, that's up 31% quarter over quarter and 983% year over year. Net income, diluted earnings per share are up 33% quarter over quarter and over 700% year over year. Then with regards to fiscal year 2024, you can clearly see the comparison here. I mean, the explosion in growth is quite remarkable. It's something that will probably be studied for years and years to come. You can see that fiscal 22, 23, flat-ish. Of course, the stock also reflected that. Margins went down, demand went down, etc., etc. But then a huge explosion in fiscal year 24. We can see this with operating income, operating margin as well. We went from 34% operating margin non-GAAP in fiscal year 2023 to now 61% operating margin in fiscal year 2024. With regards to the product mix or where revenue is coming from, fiscal year 2021, 47% gaming, 40% data centers. Moving to fiscal year 2024, 78% data center, only 17 gaming, then you've got all the rest. You might say that this is also something that is a bit risky because now the business is not as diversified as before. Maybe, but I do think that this cycle for data center are now much longer than before. And we have seen some weakness in gaming, professional visualization, and auto. Those segments have not really grown as much as the others, which you can clearly see right here in the quarterly revenue trend, which means that if, let's say, there is going to be a little weakness in data center, even though now with Blackwell, we can probably expect more demand moving forward. Of course, it's not going to be the huge year over year or even quarter over quarter growth that we've seen in the past, but continued growth, and then maybe a new refresh cycle with regards to gaming, professional visualization, auto as well. We know computer on wheels, it's only starting to be bigger and bigger. Autonomous vehicle, you're going to need quite a lot of chips. And of course, software. Nvidia is a story about software, not just hardware. In the beginning, it was purely hardware. But in my opinion, their moat is because of the software, which of course helps them a lot with regards to gross profit and gross margin. Again, huge explosion here year over year, 74% gross margin non-GAAP in fiscal year 2024 with close to $45 billion in gross profit, which then leads us to a huge explosion in free cash flow on non-GAAP basis, close to $27 billion in free cash flow in fiscal year 2024 compared to $3.8 billion in fiscal year 2023, $8 billion in fiscal year 2022, and 4.7 in fiscal year 2021. So yes, in one fiscal year, that's more free cash flow than in the last 4. Then the long-term opportunity, we've talked about this quite a long time ago. So they see a $1 trillion long-term available market opportunity. These are jumping S-curves. You've got one S-curve, and then when that S-curve is basically flattening, you have already another one starting, and so on and so forth. So they're seeing $100 billion opportunity in gaming, $300 billion in data center system, $150 billion in Nvidia AI Enterprise and DGX Cloud, another $300 billion in autonomous machines, and then on top of that, $150 billion Omniverse Enterprise, which of course, there's lots of software in all of those. Now, why is the software side of all of this so important? Well, if it was just a hardware play, then of course margins would be quite lower. Plus, we've seen all the other big tech companies also starting to release their own chips, right? So if hardware was the only thing, Nvidia would probably have an issue moving forward. But now, since software is such a big part of the whole ecosystem here, even if other big tech companies come out with their own chips, most of them would probably want to run on Nvidia software as well, or at least be compatible on Nvidia software. Plus, the more you use the software, the more you're going to get stuck in that type of ecosystem in those walled garden. Makes sense. The more software gets implemented, the more usage you're going to make of it, the more inclined you're going to be to stay inside that ecosystem, despite maybe having some, let's say, cheaper alternatives elsewhere. And that's becoming Nvidia's huge moat here. It's the software business. It's basically what Apple has been doing for quite a long time. Came out with great hardware, and then they started to build their software garden. Since then, it has become quite big. Nvidia is just doing this much, much quicker. And so moving on to the quarter expectation. So EPS normalized estimates on a non-GAAP basis, basically $5.57. EPS GAAP estimate $5.18, revenue estimate $24.55 billion. That would be up 11% quarter over quarter and 241% year over year. With regards to EPS revisions in the last 90 days, we've got 36 revisions on the upside and 2 on the downside. If you look at the analyst estimates for fiscal year 25, 26, 27, year over year growth, for fiscal year 2025, we know it's going to be still a huge one. 85% year-over-year growth for sales and close to 95% year-over-year growth for EPS. Then a slowdown, but still, in my opinion, quite a lot. So 25.6% year-over-year growth for sales in fiscal year 2026, followed by 17.8% year-over-year growth. With regards to EPS, it's still above 20% for the coming 2 fiscal years. Of course, these estimates will change in the coming weeks. And right now, the average analyst price target sits at $1,027, representing around 11% upside from the price we're at today. As you can see, price targets have been raised as the stock has moved up quite a lot. And so if we look at some valuation metrics, forward PE, EV to EBITDA, price to sales, price to free cash flow, that's in the last 12 months, and then price earnings to growth, which is still quite cheap, in my opinion, just over 1. Yes, all the others, you might say, it's paying a premium. Yes, at the start of the year, it was trading at around 24, 25 times forward PE, now 36.6 times. The stock has gone up quite a lot. It's up 86% year to date, despite us not having that much more information besides 1 quarter. So those numbers can definitely change. If you're seeing a slowdown, expect that forward PE to become a bit more expensive, depending on how much of a hit the stock will take. But overall, you're paying a premium because you're buying one of the best positioned companies on the planet right now, one of the most dominant companies as well. Yes, it's true that compared to its 5-year mean, on some metrics here, price to sales, price to free cash flow, you're a tiny bit more expensive than before, but overall, you're still lower than its 5-year mean, and in my opinion, the company still has quite a lot of momentum. Maybe not as much as before, but so far we see no indication of anything slowing down. Of course, that might change coming Wednesday. Now, during the last couple of weeks, Nvidia did acquire 2 new AI startups, one called Deci for $300 million. Deci empowers deep learning developers to accelerate inference on edge or cloud, reach production faster, and maximize hardware potential. The second one is called Run AI. So Nvidia acquires AI workload management startup Run AI for $700 million. They optimize and orchestrate GPU compute resources for AI and deep learning workloads. Both of those are Israeli companies. We know that a couple of years ago, they acquired Mellanox for $7 billion or so. That is one of the main reasons why Nvidia is now worth more than $2 trillion. And so now looking at the graph, we're very close to being overbought. Of course, we've been way more overbought before, back where we reached all-time highs back in early March. Right now, RSI is lower than before, yet we're close to the same levels, which is usually a bearish thing. But looking at all of those technicals right before earnings usually doesn't make that much sense, because if earnings are extremely well, guidance is very good, then the stock doesn't really care what happens on a technical basis. It will just go up and up and up. But if there is a small miss, if there is a tiny weakness in guidance, then look down below. 200-day moving average sits at $642. Will we get so low? I honestly don't know. I don't have a crystal ball, but some of the commenters usually have, so maybe they can tell us what will happen. Overall, that's just the picture right now. The 20-day moving average sits at 876, the 51 at 844. Like I said, the 200-day one is under $650. I think long-term investors would love the opportunity to add at a cheaper price. So overall, that's about it. That's all you need to know with regards to Nvidia. They report earnings after the market closes on Wednesday. We're of course going to cover all of that on this channel. So if you enjoyed this type of videos, leave it a thumbs up, subscribe if not, and I'll see you all in the next one. Bye bye.